Good afternoon and welcome to GrainTV. It's February 6, 2013. To my right is Cody Bills and I'm Brock Shimbino. We had another mixed trade in the trade today in Chicago. Let's take a look at the Fire Tip trading software to see what happened. Corn is actually down 8 cents, soybeans off 8 cents. Wheat was a bright spot today, up 2 cents in Chicago, and Kansas City was up 1.5 as well. You know, Cody, it seems like traders are really starting to gear up for the Friday report. This morning we did get some fundamental information from the EIA about ethanol. Why don't you take us through what we found out?
Yeah, well, it was kind of mixed, I think, in terms of the fact that we did improve ethanol production by about 4,000 barrels per day. But what did we improve from? The worst ethanol production on record since the EIA started producing those records. So really, I wouldn't get too excited about it. The one thing that is kind of exciting when you look at ethanol production is that we did see margins improve from about 1.9 cents or $1.09 a bushel to about $1.23 a bushel. That's going to bode well for ethanol production down the line. But really, once again, we are just coming in with ethanol production well below what is needed to meet the USDA's forecast, and I think that that's kind of a bearish story here when you look at corn use for ethanol.
So it is a little bit bullish that ethanol margins are increasing, but you got to keep in mind over the last couple of weeks we've seen multiple ethanol plants actually idle over the last several weeks or so, and we've been running well behind really since the last revision that the USDA made in the August report to the ethanol use of corn. So I have to ask you, coming up on Friday's report, do you think we're going to see some sort of revision to the ethanol numbers?
Yeah, I think there's a good chance we could see a revision. We didn't see a revision in January, and really, as you can see here in the weekly ethanol production model that we have up there, basically the red lines, the histogram, is the production that we've observed. The green line is actually our forecast based on margins and based on really what we've actually been able to produce. And what you're seeing here is really the last 4 weeks we've underproduced even for our model. And our model is forecasting about 100 million bushels below the current USDA's forecast. To me, I think that these numbers are so abysmal that the USDA is going to have to take them into account when they're making their supply and demand estimates this month. And I think I wouldn't be surprised if they started revising ethanol production down slightly. I don't think they're going to come down to where we're sitting right now, but I do think that they could come down maybe 25 million bushels.
So let's say they do revise ethanol use of corn a little bit lower. That would add to the ending stocks. If they add to the ending stocks, it's going to be a bearish report for corn. So if we take a look at the corn daily chart, let's take a look at some of the price levels that we need to pay attention to heading up into Friday. As you can see here on the March daily corn chart, we're sitting back around that bear trend line. If you draw a trend line from the highs we hit in August and the highs we hit in late November and follow that down, you can see we're trading right near there again in the 720 area. If we do get a bearish report, that could be the catalyst to push us below that area. We've been bouncing off that here over the last several weeks or so. If we do end up going below there, I think the next support level we really need to pay attention to is right near that 200-day moving average, which is right around $7 as well. So I think that's going to be the next support level we need to watch.
Yeah, and I guess what I would look at here is saying, a bearish report, what could that do to prices? Well, I don't think we can have too bearish of a report because stocks are so incredibly tight. If you get prices moving back down below $7, you're going to pick up that feed demand that we've been trying to cut off that was so huge in the January report. And I wouldn't be surprised, you could also see an improvement in ethanol margins. I think that this corn market really is range bound between the highs around 660 and around down low around 680 in the low side of the range. So I think I wouldn't be surprised to see if you did have a bearish report, us move down maybe around $7 and then bounce. I really don't think we can go a whole lot lower simply because the ending stocks are so incredibly tight. Even if we do add a little bit more stocks to the supply and demand report on Friday's report. Brock, we also have export sales coming out tomorrow, and maybe I'll just go through the expectations there. We have wheat coming, export expectations of around 300 to 500,000 metric tons, corn between 100 and 300,000 metric tons, and beans between 900 and 1,300 or 1,300,000 metric tons. So that's a pretty big estimates for soybeans, and I wouldn't be surprised if we saw a lot of that on the new crop side of things, a lot like we did last week as well.
We've been seeing that as a pattern lately, as new crop sales are starting to take a precedence over the old crop sales. I think a lot lot of the old crop sales are going to start going to South America as their harvest starts to ramp up. You know, they are starting to get some early harvest results out of Brazil. Of course, we'll be tweeting about that tomorrow morning once those numbers are released. At GrainTV is where you can find us on Twitter. Check us out on Facebook or get a hold of us at 877-472-4607.